Hi everyone, welcome to Share and Review. Now today we're going to take a look at the S&P 500. It is an ETF that is available on the New Zealand Stock Exchange. Before I jump across and share my screen, just remember that this is for educational purposes only, certainly not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. If, however, you're wanting to learn a little bit more about the share market, perhaps doing a share and review that you'd like me to do or something like that, just reach out, ask me, happy to help. Right, let's take a look at the US market. Okay, up here on the screen, we have got the Smartshares, which is the US 500 ETF. So ETF just stands for Exchange Traded Fund, which means it is mirroring what's happening on the S&P 500 index, and it means that you're actually able to buy shares in it, which is good. Now, this person I was working with recently, they were wanting to get exposure into the share market. They're really comfortable with volatility, so in other words, the ups and downs, and they were wanting to set up something that they could do on an automatic basis that would hopefully provide them with a return over the longer term. This person was actually keen on doing something in the US market as opposed to the New Zealand market. Now, the reason we looked at this index being USF.NZ is the ticker code, is because it's domiciled on the New Zealand market. Yes, it's investing exactly into the S&P 500, exactly the same weights and everything like that. It certainly isn't hedged for currency, so you still have currency exposure in there. But the reason this person was interested in doing this is because it's invested on the New Zealand market, so it means it's not going to have exposure to any of the foreign investment fund rules, or the FIF rules as we call it, okay, because it's domiciled under New Zealand, so the New Zealand tax rules will apply on this particular investment. If you're unsure about tax, you definitely need to go and talk to your tax advisor about this. So let's just take a look. In fact, you can see here, before we even put moving averages on, you can see here that we've had the last 7 weeks in a row has been positive for the S&P 500. That is absolutely phenomenal, which it's great. It's really, really good. Certainly outperforming our New Zealand market. Now let's put our normal moving averages on. So we'll take, first of all, we'll put 30 exponential on, and we will also put the 15. Right, you can see here that the market is trading above both of those, which is great. You definitely saw it pop through at around that week at the end of June. The last week of June is when they really popped through. So that's a great sign for this particular investment. You can see down here, it also pays regular dividends. Okay, and what we suggested for this particular person, because they were specifically wanting a growth vehicle, if you like, I suggested to them that they should reinvest the dividends, which means that when you're paid a dividend, it reinvests back into the fund by purchasing more shares. Now, obviously, there's going to be times, if you look through this period here, which was February this year, the market was in a downtrend. So naturally, if you received a dividend during that period, you would be buying more shares into that company than if you perhaps bought it where the market was at its most recent high, which was just over that $19 mark. That's what dividend reinvestment plan is you're reinvesting back into the fund by buying more shares into it. It's a great way to certainly get more exposure into a company or an investment at less risk, because also when you're reinvesting your dividends, you're not paying brokerage fees on them, which obviously cuts down costs and things as well. Now, I'm really comfortable that if people do that on an index, simply because with this particular one, if a share falls out of the top 500 companies on the Standard & Poor's Stock Exchange, the fund will automatically replace that. It will automatically take one out and replace it with another. So it means that you, as an individual investor, you don't have to be worried about, gosh, should I hold this? Should I sell it? What's going on? You can fit pretty much within reason with a index fund like this one. You can almost sort of set it on autopilot and let it run depending on your goals. Now, I'll take these moving averages off just so that we've got a clear screen. Now, with any share or indices, there are going to be downward periods, and we saw that here, which was around October last year. The market had quite a bit of sell-off before we started seeing some recovery. Now, if I go back as well, to 2020, you can see here, which is when we started having the COVID pandemic, there was a really big sharp sell-off very, very quickly. The interesting thing that I want to point out is if I just hover my cursor here, at that time on the New Zealand market, the S&P 500 was trading at just under $10 per share. So even taking into account that dip, it's now almost doubled that. Okay, we're at $18.75 today, which is as at recording time. But what I'm getting at here is with a fund like this, yes, there are going to be periods of down. But if you write it out, usually indices will rise higher than where the last fall was. So at the moment, we still haven't quite got to our peaks, which was around January this year, but we're not far off it. Like our peaks at that time was about $19.15. We're trading at $18.86 at the moment. So we're very, very close. And that's what I like about trading or investing into an ETF is you can pretty much set them on autopilot. Yes, you are going to have those periods of volatility where the market will sell off. But if you keep regularly investing and contributing and not worry about those fluctuations, and just about all instances that I've seen with something like the S&P 500, it will rebound over time. I can't give you timelines as to how low they will fall or how long a recovery will be. But over time, they will generally start outperforming what has been happening prior to that fall. Let's just actually change this to SPY, which is the S&P 500. If I go back to all, it's got those dividends showing, but hopefully we can see that. This period through here, we had quite a big sell-off, and that was the credit crisis back in 2008. If I go back to 5 years, might make it easier. Right, I've got that up. You can see here that prior to the big sell-off, the market hit a high of about $154, $155 was roughly the high. Now, thereafter, we started seeing quite a big fall in the S&P 500, as what happened with most indices all around the world, including here in New Zealand. Then we hit a bottom, and that bottom got as low as just over about $67 or thereabouts. Then we started seeing a recovery. Now, the thing is if we come forward to today, sure, it's 2025, you're looking at some 17 years on, but you've gone from a market that was trading at, around that $150 odd mark to 637. And that's what I mean with an indice. So it does depend on your timelines, of course, but they will usually recover over time and end up performing better than where they were pre the dip. So even though I've moved on here, like I've just moved my screen on, and even if we go to 2012, it still wasn't back at those pre-2008 levels. But once we started getting towards the end of 2013, that is where we really started seeing that market gain. And look at this, it's almost just about being a relatively straight line. You've got the odd dip along the way, but it's certainly been a very, very good performer. So that is why, stop sharing, that is why I've suggested to this particular person that they may want to consider investing into this fund. They've got a long-term focus. They want to set up a regular contribution to it. They want to reinvest their dividends, and they want to make tax as simple as possible. So that is why I've suggested that they perhaps go and do their research on that fund, because it may tick all of their boxes that they're wanting to achieve. I hope that's helped. And if there's anything you would like to know regarding the markets, please let me know. Please send me a message or comment below. Happy to help you on your financial education journey.